All right. Welcome everybody to my daily review. I am going to give you the down and dirty on August 1st, where it was a kind of nasty day today, especially, on the Nasdaq. But anyway, welcome to my daily review. Like I said, today's August 1st. And I just wanted to go over a couple things today. It's going to be a shorter video. But I don't want people to get too down. People get down when the prices get lower, and you should be kind of embracing lower prices. What we had here was a 22% run from April 19th to July 11th. And July 11th, it hit that high of 18,671. We've had a 9% correction since. So 22 up, 9 down. That's kind of standard stuff. This is a 3-month rally, and it's only been down 3 weeks. It's only been correcting 3 weeks, so it's going to need more time. What I'm kind of encouraged by is it made this low of 17,033 on July 25. And then on the 30th, which was a Tuesday, it made a low of 17,015, and today the low was 17,051. So that keeps pushing down to that 17,000 level and kind of holding there. So, it's below the 50. Technically, it's below the 50. So this is caution land right here. The power trend is going to turn off when the magenta line trades below the 50, but this bout of selling tells me to get the heck out, and it probably just a matter of time here before this magenta line trades through. You can see the green line, which is a 10 EMA, has already traded through the 50. So it's just a market correction. These corrections are going to happen once or twice a year, in an uptrending market. You can expect these. The last one happened here from March to April 19th, was a month in duration here. It was March 21st till when we reversed lower, April 22, April 19th was the low. So it was 1 month in duration and about 9% in, I don't know if it's 9%, and I didn't look at that. I know this is 9% already in 3 weeks. So it's been swift. The thing about today is, yesterday acted like a follow-through day here, where it was up, 2.3% with volume higher than the prior session. So this is looking good here. But what you don't want to see on a follow-through day is the low of the session taken out, the follow-through day low, which was 17,438, and that was a long ways ago, like 400 points ago. So anyway, you got to be cautious in a market like this because you don't know how low it's going to go or how long it's going to last. There are some stocks to trade. So I'm not going to go to red just yet. There's still stocks to trade, and there's other indexes that are doing better than the Nasdaq. It's just the Nasdaq and the S&P are really struggling. The mega cap tech stocks were selling off, and the small caps and the mid cap stocks were doing well, but now today pretty much everything sold off. So I'm going to get to that in a minute. This is the S&P. Had what was essentially a follow through yesterday. You can see the volume higher than Tuesday. Had a nice move on Wednesday of 1.58%, but what happened today undercut the low from yesterday and closed below its 50 there. So it's nearly 1% below the 50. So this is caution. You need to be cautious here because it could really, start cratering lower, and you don't want to get caught in a trap door and fall down another, 5 or 6%. That's not going to be healthy for your portfolio. So if your trades are not working, back off. It's okay to get out, reassess the situation. The market did not do what I expected it to do today. So that tells me to be a little more cautious. I thought the mid caps, after the Powell indicated interest rates, I thought the mid caps and the small caps would do well, but the IWM or the Russell just came down to its 20 today, found support, and I wouldn't call that a bounce. I mean, the low was 2171 and it closed at 2186, 15 points. It's not a bounce, but you could say it traded down there and found support. We'll see tomorrow. Or, tomorrow's close is important, the end of the week. I want to see what the institutions are thinking. I am expecting a bounce here, believe it or not. But we'll see what happens. And if it falls through, then you got to start looking at some of these gaps to be filled here. This one has a gap at 21.28, which is a far cry from 21.96 or 86. So, and it's got another gap here. I don't want it to fill that one of 20.51. So just a heads up. The other one that is doing well. I mean, if they're at their 21, I mean, they're doing a lot better than the other index, right? What I just showed you. And this is the mid cap, and it's 1.9% above it's 1.9% above its 50 and just a tick above its 21 there. So still, hanging in there. We just got to wait and see. You got to be patient. You don't want to be a hero. You don't want to jump in and then get crushed. So you got to be cautious. That's my word for the day, caution. I need some yellow tape. All right, I'm going to take a look at some of the stocks here. I don't know. There's most damage, and I don't want to be too negative, so I'm not going to show all that. I mean, if you want to, you can. I just got to point out here one thing here. It was kind of like the okey doke, because yesterday, Powell made his decision, and oftentimes the first move is the wrong move. So Powell, they said they're not going to hike the rates, and the market kind of went up there, and then today it gave you the old okey doke. In the morning it went higher, and then man, just got slammed hard. What was the high today? Oh man, what was this? 17? I shouldn't have wrote over that on the 5-minute chart. The high today was oh God, Marty, you ran a retard here. 791. Wow, 17,791. So that was a fall, quite the fall here. Talk about a trapdoor, yeah. 17,791 down to 1705, man. That is a slide for the Nasdaq. But like I said, the first move is usually the wrong move, and it usually makes the opposite move, and that's what it did. So that's kind of expected behavior, but it sure was pretty harsh. And like I said, it's got this bottoming pattern here around 17,000. So we're just gonna have to watch that area. And like I said, it's been a 9% correction. If it's going to give back 50%, then it's got of this move, then it's got a couple more percent to go. So just be patient. Like I say, don't be a hero. And I am going to get to some stocks here in a minute. Believe it or not, Microsoft, they reported earlier in the week, pretty darn good report to have this kind of a response. That's pretty depressing if you're a Microsoft long, or if, this is what's affecting the S&P as well and the Nasdaq. Meta reported a good report as well, and had a good response. I mean, it closed near the 44% of its daily range. Still, near 500, not bad for Meta, but this is a really strong report. They did say they're going to spend more money, which is good for NVIDIA, but Wall Street doesn't really like that. Google, they reported last week. They reported a strong number and sold off below the 50. There's not really much to say here between the 50 and the 200. I mean, if they rally through, great, then I'm out for it. But if they're in no man's land here, I just got to stay away. Sorry, Google. Can't do it. Tesla was one of the stronger ones here, and it sliced its 21 today. It looks like it has a date with the 50, which is just crossed over the 200. We'll see the golden cross for Tesla. Anyway, what was the other one? Oh, NVIDIA. They don't report for a while. They got the 28. So traded up to its 50. I had this on the ready list today. I thought if it could rally through the 50, then I'd be interested there, about $120. But it hit the 50 and got rejected. So that's why you don't want to jump in too quick. And if you do, you got to get out because you don't want to feel that pain. And who knows, this one might want to make another low. I said, what did I say yesterday? That was the low, 102.54. We'll see. I had a friend who said it was below 100 after hours. So I'm going to say it was under 100, but it wasn't under 100. It was 102. But maybe it does want to go back to under 100. I don't know. Just got to wait and see. I don't like stocks below their 50, but if they want to rally through, I'm all for it. Let me see a couple other stocks in the group today. Man, lots of failures. Qualcomm, it was up after hours yesterday, I believe. I thought it was. I don't know. I'd have to look back at the charts. But anyway, today it sold off, nearly 10% after it's a pretty strong earnings report. You're seeing, growth in earnings and sales, but Wall Street don't care. They're just selling these things. AMD, talked about it yesterday, how it traded up to its 200, got rejected, closed 33% of the daily range, followed through to the downside today. And this chart's just a mess. I don't know. Maybe it'll do something like make a double bottom pattern here from that 227 to 144, then back up, and maybe it'll bottom out. Maybe you'll be able to get it around $100. Who knows? If you're lucky. All right. LRCX. They actually had a good report too, AMD. LRCX, I mean, I don't know. I thought 36% sales growth and 21%, 21% sales growth and 36% earnings growth was good, but apparently Wall Street, they're not having it here with the chips. The chips are being sold hard, and I could do this all day, and I don't want to because it's too negative. And if you want to find negative stuff, go ahead. I'm just going to try to gravitate towards some positive stuff. I want to go to retail a little bit here. CROX. They reported a pretty good quarter, and the guidance. Let me get this straight. They beat by 46 cents, so they came in at 401. Yeah, and the last year was 359, and the estimate was 355, I believe. They beat by 40. They mashed the earnings, and then the sales growth pretty tepid at 4%. Hey Dude's killing them. Hey Dude only had 198 million in revenue for the quarter. And so they've got a guy, a brand manager for Hey Dude. They said they're going to target females. They're going to go global. China, Crocs is selling fantastic. Crocs is doing great. If they didn't have Hey Dude dragging them down, the stock would be a lot higher. But with Hey Dude, I'm going to dive into Crocs here a little bit. They've got this debt here, so they're paying down debt. It's a cash cow. I mean, they got cash flow, return on equity in spades. I mean, they're very good company, well managed. They have very good control of their inventory. The CEO is always conservative though, and he always is pretty conservative with guidance because he wants to crush it by 46 cents. So the market takes him literally. So for the next quarter, he lowered guidance, by just a little bit. But then for the full year, he raised full year guidance from $12.45 to $12.90. I mean, how much is $12.90 worth of earnings? I mean, $13. Come on, man. They're doing over 4.5 billion in sales with a 7.9 billion market cap. So it's less than 2 times sales with a PE, below 10 now. With $13 in sales and it's $130 stock. Okay, I'll call that 10. But it's the growth rate that's a problem. And Hey Dude is it's just an albatross on them. But if they figure out Hey Dude, if they can get a shoe to compete with Decker's Uggs brand, they would be in business because it's a seasonal shoe, spring, summer, fall. It's lightweight, slip on. They need something with a fur lined, and I'm not gonna petition for a job at Crocs, but they can figure this out. This thing could be a real juggernaut. Crocs in China is just blowing up. Chinese consumer likes these ugly shoes. And I'm going to move on from Crocs. I think it's going to trade higher. I really do. Even though it's below its moving averages. This is Carvana. If the market was cooperating, this thing looked like it was going to go up to like $160 today. It was really ramping at the open. And I don't know how I made it today, but it was really ramping here. 154 was the high. Got back up there a couple times and then sold off with the general market weakness. But you could see on the daily, this thing breaking out of a base. Looks fantastic. I had it on the ready list a few weeks ago, but I don't like getting, into earnings and getting people in trouble. But this one worked out well. So congrats to the longs there. SNBR is sleep number. You wouldn't think that the retail home furnishings group would be doing well, but it was up 20% today. Just to note here, the RS line, traded through, it's pointing due north, I should say, and the stock price is trading through all of its moving averages now. So that's something to watch out there at that 1634 level. where is it, 14, 15? I'm going to keep my eye on this one because that's a move you do not want to ignore there. Trying to break out of a stage one base really kind of surprised me because look at this downtrend, you know. But some stocks, you know, they stop going lower. Guess what? They go the other way. So I'm going to keep my eye on Sleep Number. Anyway, that's it for the retail group. I have to get to the medical product stock. We're pretty strong today. Transmedic, pretty strong, really strong sales growth here. You know, triple digits in earnings growth. Really, you know, company that is saving lives with their products. I think this has got a runway for growth. They're just getting started. This one today was up to 171 and closed at 151 and near the you know, 4% of its daily range, which is not something you want to see, but don't give up on it. I still think that 154.74 here is an area of interest. I would take a swing at it right there. Transmedics looks pretty good. All right. And don't give up on tomorrow. You know, today's just one day. And like I say, the market has no memory. And these things can, you know, do well. That's why I'm going to leave myself on yellow. Market conditions on yellow. Because I think there's still some stuff to trade here. It's not all, you know, doom and gloom here. We're not in a bear market. CareDx, the medical product stock, ramped 17% with 523% above average daily volume. That's a move not to be ignored. Yeah, I know it's extended, but this is the kind of stuff that you keep your eye on as this 10 EMA now. See, I was hugging the 10 EMA, blasted above it. It'll probably, you know, meet it once again when it gets up to like, you know, $22 area, 23, a little pullback, and then go, right? Kiss the line and go. That's what I want to see from this stock. So don't give up on these. They look pretty good. SLNO, another medical product stock. It's just consolidating in a base. Kind of like this, you know, it's shown the ability to move. It really has. This one's ramped a few times. Now it's gone sideways for a long time. So it's in this consolidation phase for 22 weeks, but it's near a buy point here, trading tight within the base. You know, if the market conditions were better, you know, I might put this one on. They have earnings next week. I wouldn't be surprised to see another, you know, big ramp like we saw before. What was that, a 504? It was up 504% in a day. Holy smokes. All right. Intuitive Surgical, another one of these big medical products. You know, the Da Vinci is you know, fantastic piece of equipment. And this one broke out, pulled back to its 50 simple moving average. Now it's trading tight. I don't know if it's just going to form a flat base pattern or what, but you know, showing relative strength in a weak tape with the Nasdaq down so much, this thing's up. So that definitely sticks out like a sore thumb. And then OMCL, another earnings play that gapped higher out of this stage one base. It's got that 33, 38 buy point, but you know, a little extended now, up 33%. A move not to be ignored. But you look at it, it's really sold off, you know, and it was what, a $200 stock or a $185 stock, and it's, you know, masquerading as a $38 stock. We're breaking out of this stage one base. You got to pay attention to stuff like that. Anyway, that's enough for the good things from the medical product stock. CWAN, you know, some of the financial names were doing pretty well. This is Clearwater Analytics, and it was up 20% on an earnings move. This one, yeah, breaks out of a base here. That looks fantastic. Clearwater Analytics, CWAN, just kind of, you know, marking down a few things here. This is a lending club, had this big move and then pulled back to its 10. So maybe, you know, it'll find support here and get back above that $12 level. Just gotta wait and see. Then SEZL, SEZL, sliced its 50 today. So this one, no bueno. Yeah, down 12%. No, thank you. Hit and miss in that area. The drug stocks were doing well today. Quietly, there were some drug stocks. This is another one I would put on the ready list, but it's just, I've got to see how the market conditions are tomorrow. Like I say, there's still some things you can trade. This one, you know, looks great, you know, consolidating within that flat base pattern. It's shown the ability to move, which I like. You know, it doesn't go sideways for years and years and years. This one made a big move here from 8 to 17. That's a two bagger. and now it's sideways. So yeah, I like Teva. Let's take a look at the weekly here. Yeah, there's that big move. The base, you can see the blue dot, which indicates relative strength for the relative strength line. NBIX with a move. I said I don't like this stock because it traded sideways forever and a day. This one is playing a possum on us, and today finally broke out 8% in a week tape. So congrats to the longs there. I know some people mentioned to me that they were holding it. And if you're a patient person, which I'm not, and you could sit through all this up and down and up and down, I guess you could, buy the dip and sell the rip and buy the dip and sell the rip and keep doing that, trade around a core position. But this one bounced off its 50 nicely. So congrats to those who held on to that stock. Lilly, they have the miracle drug. Mounjaro was which we know Novo has already been approved for. It was a phase 3 trial for heart conditions, cardiovascular. So Lilly was up on that news. They're going to have earnings next week. They're going to crush it. The CEO also said that, and it will be a very short period of time where the shortages of their drugs will be, there will be no more shortages. So they're going to have plenty to go around. So they must be really busting it manufacturing the weight loss drugs. I'm looking forward to hearing from Novo about their manufacturing as well, before this Catalent deal gets approved or not approved or whatever. So, yeah, we need the manufacturing for those weight loss drugs. They're fantastic. Sleep apnea, heart disease, kidney, Alzheimer's, they even fertility, pregnancy drugs. It's a miracle drug. This is a EXAS, Exact Sciences. You can see it's been in a clear downtrend, but might want to trade out of a stage 1 base here. We'll have to wait and see. It's still below its moving average of the 200. Wow, you can see this group's really moved up to 16 now. So the drug stocks are doing well. A lot of them are smaller biotech, so that kind of stands to reason with the mid cap and the small caps outperforming recently. And I think that's it for the drugs. ACIW. I'm just going to go through a couple of these software names. A breakout, today it had a big move and then pulled back like everything else. I mean, it closed at the 10% of its daily range. It was up to 48.80, closed, $3 below that. That's just the market that we had today. So you just got to deal with it. You don't get what you want, as Mick's saying, you get what you need. And the market's going to do what it wants to do. It doesn't care about you. It's very ruthless that way. So, when things are going good and you're making a lot of money, don't be too glib, take profits, because these days you feel, how difficult this is. It's not an easy endeavor. So, you need to, hone your skills here and don't get too silly and giddy when things are going good, and don't get too down when things are going bad. This is Zeta Jones, Global Holdings. It was up 12% today. Nice move, but it was way higher. It's 25.53. And then, once again, 33% of its daily range. Market weakness. But these guys just continue to, look at their earnings line. They continue to deliver their earnings. And as long as they do that, this is one of those IPO stocks that I pointed out in my IPO video. I think it could be a real home run grand slam, as I do with ESTC, which is not doing that well. Just consolidating in a base, pulling back to its moving averages. This is a weekly chart. I got to go to the daily. Yeah, pull back to the 200 today. They don't report for a long time, so this one looks like it's going to be in limbo. Anyway, that's it for the software names. Just a few builder stocks I'm going to point out. Front Door, nice gap higher, 12% with volume on an earnings beat. So that one looks pretty good. GRBK. See, I thought the home builders, the financial names, those that are going to benefit from lower rates, would do well today. This didn't do bad. I mean, it's flat on a terrible day, but kind of surprised me that the small caps, the mid caps, but it's early. Like I say, give it time. Let's see how it closes tomorrow, because the small cap should benefit. The more and home builders should benefit from these lower rates. The bond market's telling us rates are coming down. I think the 10-year is below 4% today. So it's not a question of if, it's when it's going to happen. And maybe the market's thinking Powell's late to the punch here, because the data is showing, it's slowing economy, it's slowing consumer. This is NVRI, let me see, NVRI, metal fabrication stock up 5% in a pretty weak tape, right? 60% of its daily range. So just pointing out some strength in the market here. I got to go to the defense because the market has been very defensive. This is LMT, and ever since it broke out, it just wants higher prices. Phenomenal. This thing looks great. RTX is Raytheon or United Technologies. Just flat on the session. Flat's good when the market's diving like it did today. Flat is good. And GE, I kind of like the way this thing's setting up. Trading tight within a base, marking time. The moving averages are catching up here, just trending higher. So I think that's a pretty easy hold right there. I mean, down 45 cents. Once again, this thing took off in the morning, looked like it was really going to break out here. And this is what, 45 minutes into the session, it was pushing 175. And you're thinking, all right, it's going to break out and take out that old high. I think it did take out 174.73. 69, yeah, 70. So I guess you'd call that a double top. No, it's not a double top. It's just trading tight within a base, and it's got to take out this high right here of 177.20. But still, I like this thing. There's a lot of different areas where you can consider this a buy point. It traded above, this downtrend line here, blasted out on earnings. And then just kind of marking time here. It's marking time. There's nothing wrong with that. Especially with the indexes doing what they're doing, really gyrating a lot and trying to digest this data and all the information from the FOMC and these earnings reports. All right, and then I mentioned the financials, and they just, JP Morgan, I thought this would do something this week, but trading back near that old buy point of 205.88. If it comes back there or pulls back to the 50, still, a good looking stock there. Morgan Stanley, another one, sliced to 21 today, like JPM, back near that old buy point. So we'll see if it pivots off the pivot. And then HBAN, this one looks pretty good to me. Broke out of this base and now it's pulled back to its 21, right near its old buy point. I might even actually put that one back on. You got to see it bounce here tomorrow or next week, not have it slice through and slice through the 21, slice through 14 and come back to the 50. Yeah, that would kind of I don't want to see that. Anyway, that's it for me. Thank you for watching. Don't get too down. We never give up and stay positive. These corrections bring lower prices. You're going to get quality merchandise at a lower price, which is when you go shopping for a car, you go shopping for gas or a sweater or groceries, you want lower prices. But in the stock market, we want to chase higher prices. So it works kind of reverse. Anyway, that's it for me. Thank you for watching. Except in the honor of the great Steve Jobs, we have one more thing, and that is some companies reporting earnings tonight. Amazon, I think they missed on revenue. I think it was an earnings beat and a revenue miss. That's not going to help tomorrow. So this is kind of, software, web services, and retail, of course. And so we'll see how that impacts the markets tomorrow. That is not good. Apple, I didn't see their report. Looks like a muted response there, but I'll have more on that in the morning. Intel dropped a bomb on the market this afternoon where they're going to cut their dividend. I think they're going to suspend their dividend. A lot of people buy stocks like this just for the dividend. They can take some pain as long as they're getting those quarterly checks. And if you take out that quarterly check, which is a yield of less than 2%, just get rid of that stock. Sell it, please. Put it out of its misery. My goodness. The chips are hurting anyway, but down 18% after hours, cutting the dividend, that's no bueno. I saw coin was up after hours. I didn't see the report, but 5% move. This is, the big platform for crypto, and I think this is going to be a big winner as well. I'm not sure if I put that on my IPO. I should have, because this is going to be a big winner in the, I know it's too big of a market cap. All right, but I think it's still going to be a big winner and have a lot bigger market cap than 52 billion eventually. Oh, DraftKings, this is a stock I'm not a real fan of. Yeah, nothing. I'm gonna change my platform here for next week. I'm not gonna include all these stocks, because I want want people to focus on just stocks that I'm interested in. And some of this stuff, is, I'm not really interested in. Roku, who cares? It's up 6% after hours. I don't care. Below it's 200. It's been a dog for a long, long time. Shouldn't even be looking at that stuff. Square, kind of the same thing, been a dog for a long time. Taking out its moving averages, up 4% after hours. So maybe crypto is moving after hours. Booking, this one has been a really strong stock for a long, long time. I think, if you go back to, Priceline.com days, look at that on the monthly chart, been a big winner. Down 6% after hours, kind of stands to reason that, with the consumer pushing back and pulling in, that they're not going to be, those airlines, cruise lines, and hotel, Airbnb, that type of stuff is going to be suffering a little bit until they get the rate cut. Then everything's going to be great. MELI up 11% after hours. Did not even look at the report, but I'll include that tomorrow morning. Thank you for watching at mcstockcharts.com. We never ever give up. Stay positive, folks. This too shall pass.